We just witnessed one of the largest updates from China since going all the way back to 2008, and this is very, very important. Welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. So like I said, this is one of the biggest updates that we have really kind of witnessed from China since going all the way back to 2008. We have here, just in, China is considering injecting 1 trillion yuan, equivalent to $142 billion, into its largest state banks for the first time since the 2008 global financial crisis. Now, everyone is getting very bullish about this because they're saying, this is going to be, liquidity entering the market. And we have been noticing a lot of liquidity announcements specifically about crypto trading, opening floodgates to crypto trading. PayPal with their recent announcement of allowing US businesses to tap into crypto as well. There's been a lot of great announcements around improving liquidity, but the problem here is these injections. These injections are not bullish if you really think about what's happening here. This goes all the way back to 2020. For an example, if we go back to 2020, the total amount in stimulus checks was equivalent to $814 billion. Now, this money has to come from somewhere, and this money is not free. For an example, all that money that we were given during stimulus, guess what? For the next 4 years after, we had to pay it all back. And how do we pay it back? Well, we paid it back through inflation. The cost of gas, the cost of groceries, the cost of utilities, all of that skyrocketed. And this is why when we really think about what's happening around some of these injections, like for an example, what China's doing, it is quite concerning. Now, is this going to pump the markets? Is this going to allow liquidity to flow in? Sure, it is. But what happens after this is the crucial thing to focus on. Now, remember, this is all around their largest state banks, because banks, specifically liquidity around these banks, is constricting. It is still at all-time lows. Liquidity is drying up. Over here, we have China to issue $284 billion of sovereign debt as part of a fresh fiscal stimulus sources. And yes, if we actually look at this, exclusive, China to issue $284 billion of sovereign debt this year to help revive the economy. This was the initial announcement, $142 billion to its largest state banks, but we now know that this is actually $284 billion. Some of the fiscal support measures could be unveiled as early as this week. Half of the stimulus package designed to stimulate consumption, the other half to help local governments tackle debt problems. So, all right, now we're injecting money into solving debt problems. Does that make any sense to you? Let me ask you all this. Does that sound like a sustainable path? Hey, we need to tackle some of these debt problems. Let's just inject even more money into it. Funds to provide monthly allowance of about 800 yuan per child to all households with 2 or more children, excluding the first child. So this is basically 2020 all over again, except over in China. This is Stimulus 2.0 Chinese edition. And it's kind of crazy, but what we are about to witness is something very, very significant. This is going to lead us into a debt crisis. And I actually saw Gold Telegraph put out a post regarding this. We have China is preparing to inject 142 billion of capital into the country's top banks. Again, we know that this is just half. The other half is going to, families and things like that. But we have, this would be the first intervention since the 2008 financial crisis. This is massive news. And yes, it is. Gold is at record highs in most fiat currencies worldwide for a reason. Global debt crisis. Now, I do believe that almost all assets are going to pump heavily. Gold is going to continue. Crypto is going to continue. But I have been also warning you guys about what happens after, because the warning signs are right in front of us. We are headed towards a debt crisis. And the big question here is, what's going to really happen here? Because although, yeah, we get, a debt crisis, we also lead into a liquidity crisis. The reason why I say this is because we're now adding more and more debt every single day, historical levels of debt. And if you guys do remember, back in this was posted around 2023. This was January of 2023. This is from the World Economic Forum. The global financial system is facing 65 trillion in hidden dollar debt. And if we come back down here, there is 65 trillion in unrecorded dollar debt in non-US banks and shadow banks across the global financial system, as this graphic shows. The debt is in the form of foreign exchange swaps, which have exploded over the last decade due to years of monetary easing and ultra low interest rates. To reduce currency risk, companies, central banks, and financial institutions will buy forex swaps to protect themselves from unfavorable foreign exchange rates. The massive growth in dollar debt presents significant risks such as liquidity crunches. And there you guys have it. This is from the World Economic Forum, literally talking to you guys about liquidity crunches, increased volatility and instability in the wider financial markets, experts warn. Now, why is this important? Well, we're starting to see rates being cut, which means we're going to start to see a lot more money lent out, which is only going to increase debt even more, which is also going to constrict liquidity even more. They are throwing gasoline onto the fire right now. And what's even crazier is that we don't know what to believe, because back in December of 2022, we're talking about 1 month before this article got posted, we know that the BIS, the Central Bank of Central Banks, said that the foreign exchange swap positions point to over 80 trillion of hidden US dollar debt reported off balance sheet. So is it 80 trillion or is it 65 trillion? This is very significant to focus on. Debt is just ridiculously unsustainable right now. And a lot of it, we don't actually know how much money there is in debt, especially hidden debt. We know how much money is in debt, but the hidden debt is the thing to focus on, because once the curtain closes, the show stops. And with that show stopping, we also start to see the cracks in the foundation really opening up, and all hell breaks loose. I say this because what we are headed towards is not your typical 2008 like crash. I've been trying to warn people for a while around this, and even now with the Fed cutting rates, everyone's like, all right, well, everything's all fine, everything's all good, the markets are pumping, so everything's all good. But remember this, and I'm going to say this one more time. Everyone is having a great time right before they start having a very, very bad time. If you go back and look at every single crisis in time, you can clearly see it. Back in 2007 into 2008, everyone was buying, new cars. They were going out and buying the, best things. Everyone was having a great time. And all of a sudden, the world came crashing down on them. The reason why I say that is because markets will do very, very good. Very good leading into the crash. We will melt up because central banks will rush out to prop markets up, especially during a year where the elections are here. China now injecting $284 billion is a very big deal. And it does remind me back to, 2020, because this was around $814 billion. It's not exactly the same amount, but this is very, very significant. Now, I want to lead you guys into this because this is from Jim Rickards back in June. And we have banking crisis stage 2. I'm sure you recall the banking crisis of March to May of 2023. It began with the collapse of the little-known Silvergate Bank on March 8th. This was followed the next day by the collapse of the much larger Silicon Valley Bank. On March 9th, SVB had over $120 billion in uninsured deposits. Bank deposits over $250,000 each are not covered by the FDIC insurance. Those depositors stood to lose all their money over the insured amount. This would have led to the collapse of hundreds of startup tech businesses in Silicon Valley that had placed their working capital on deposit at SVB. There were also much larger businesses such as Cisco and at least one large cryptocurrency exchange that had billions of dollars on deposit there. Those businesses would have taken huge write-downs based on the size of their uninsured deposits. On March 9th, the FDIC said that indeed the excess deposits were uninsured and depositors would get receivership certificates of uncertain value and zero liquidity instead. By March 11th, the FDIC reversed course and said all deposits would be insured. The Federal Reserve intervened and said they would take any U.S. Treasury securities from member banks in exchange for par value in cash, even if the bonds were only worth 80% of par, which most were. Now, I went and summarized this over here. So we have the first stage. But despite these efforts, the crisis was not over. The text highlights historical patterns of financial crises unfolding in stages, often with a quiet period between initial distress and a more severe phase. The concern is that this current banking crisis could worsen quickly due to the speed of modern technology, which accelerates bank runs. The FDIC reported large unrealized losses in U.S. banks, suggesting that many are still at risk of failure. As unrealized losses mount, especially in smaller banks, the possibility of further systemic collapses looms. The author warns that this stage could have catastrophic effects on the banking sector and the stock market, advising that gold is a safe asset to preserve wealth during the crisis. Now, I do believe that gold is very good. I think assets, being asset heavy right now, is crucial. But as we really look at this, it is having the same exact patterns of all crises in the past. We don't know how or when this is going to happen exactly, but we can prepare for this. And I also believe that we have the answer right in front of us. And I also believe that this is why we're seeing such heavy discussions around crypto in the US. For an example, right? Although, yeah, this is a debt crisis, it will typically lead into a liquidity crisis, just as we saw over here from the World Economic Forum mentioned, right? We have down here that the massive growth in dollar debt presents significant risks such as liquidity crunches, aka a liquidity crisis. Now, over here we have the 65 trillion off the balance sheet debt the BIS issued a report on, with its murky view of just how close we might be to a liquidity crisis. In my opinion, will set CBDC narrative into hyper mode. And yes, a lot of people are going to be looking at, all right, well, if we are going into a liquidity crisis, now's the time for them to push the digital system. Because injecting liquidity with today's inflation is not ideal, XRP might help. And I believe that XRP, as well as the entire crypto space, will help in a significant way. This is actually from Policy Director APAC at Ripple. Check it out.
Now here at Ripple, we've built a CBDC private ledger that is based on the same blockchain technology that powers the XRP ledger, which was built for payments and designed for issuing currencies. Each central bank will have complete sovereignty and ability to customize their CBDC based on their own unique privacy and policy requirements. Neutral bridge currencies like XRP, which is an open source, public, and decentralized digital asset, will play a key role in facilitating such interoperability. And keeping sustainability in mind, the CBDC private ledger is carbon neutral and 120,000 times more efficient than proof-of-work blockchains.
Ripple and XRP stand at the forefront of solving the liquidity crisis. And in fact, I believe that they will be the key to the liquidity crisis. And the reason why I say this is because not only do we have that on-demand liquidity opportunity, but XRP does free up a ton of working capital. And we're talking about trillions of dollars around banks. Also, Nostro Vostro accounts, 27 trillion was the last recorded amount that was locked away in those Nostro Vostro accounts. Immediately, that amount of money is freed up. When we think about all of this debt, yeah, Ripple and XRP could solve this. They could be the key to solving the liquidity crisis. That's why I look at crypto in such a very large way, because the efficiencies and the opportunities that crypto does offer to these governments, especially at a time where, these crises could break out at any second. Yeah, they will become very valuable, in my opinion. They have a ton of value tied to them today. The problem is that we're still tied to Bitcoin. We're still tied to hype and, speculation. But there is a lot of great utility in the space that could be utilized as the key to saving the financial system. But the way that I foresee this all happening, I do believe that we get that liquidity crisis. I believe that they utilize it as an example to push us into a digital financial system. I think that they want this to, be the case. I think that they want to implode the system. Why do you think that, now with the Fed cutting rates at a time where debt is out of control, the payments on debt is ridiculous, they're just throwing, gas onto the fire? So think about that, right? Why are they doing it? Well, because markets have been propped up this year. It's election year. 2025, 2026, guys, that is the time frame to focus on the major black swans hitting the market. That's the major time frame to look at, a massive crash happening as well. So with that being said, if you guys enjoyed this video, if you guys definitely leave a like, subscribe, to notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.